Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. How you going? Thanks for joining us on the podcast today. And it's we're being back at work for a month or so after the Christmas break now, and what I thought was going to be a pretty active year in terms of property just keeps getting stronger and stronger and stronger. We're recording this just after the RBA interest rate announcement at the start of February. So the first Tuesday of every month, the RBA comes out and says what it's going to do with the official interest rates, the official cash rate, from which normally dictates or determines what happens with your mortgage. What we know is that rates are going to stay stable, and picking through the RBA minutes, having a look what the governor's saying, indicating that we're probably not going to see rate rises for about 3 years' time. So what does this mean? It means that your interest rates should stay relatively flat for this period of time, compounded with a whole bunch of the other sort of macro and micro economic meddling that's going on right now. It bodes well for probably strong price growth in property over this coming period of time. Now, this is all very interesting. There's a lot of commentary around it. People are talking about this being the Roaring '20s, so a repeat of 100 years ago. The IMF, which is a big global body, if you're not familiar with it, that sort of gives insights into what's going to happen with the financial economies of countries right across the nation, looking at about 5% increase in GDP in 2021, which is pretty big. And they reckon that Australia's probably going to go at about that sort of 4.55% level. So all these things, it might not mean a lot to you, but you stick them all together and you join the dots, it bodes well, I think, for property investors. Not my job to really give you any recommendations around that. I'm just a journalist, and my job's just really to curate these ideas and bring people onto the Smart Property Investment Show to have a discussion about it. That said, I turn to some economic commentators, people like the AMP chief economist, Shane Oliver. He reckons 10% per year over 3 years. Add all that together, that's 30% growth in property. Pretty good if you're in property. If you're not in property, maybe an indicator to get in property. If you're far away from investing in property, maybe you might miss the boat and you need to look at other asset classes. So this is the environment we're operating within. Now, there's a lot of reasons for this. Government stimulus being one of them. I'd like to think good leadership from the government for Australia to actually steer us through COVID and out of COVID. The Treasurer has come out and he's pretty much said no more money, Australians, for JobKeeper and JobSeeker. We've got to turn the tap off. Got to get back to business. A lot of those jobs that were lost over the initial part of COVID are now back. So things are looking good. It'd be nice to get some job seeker people into paid employment. I tell you what, there's plenty of jobs right across the nation if you want to go and look for them, particularly in fruit picking. So there's lots happening. But what does this mean with COVID-19? Fundamentally, it's made Australia think differently about how Australians choose to live their lives and where they choose to live them. And that's a pretty interesting sort of paradigm to have, a wholesale shift in attitudes towards how people want to live right now in this period of time. A lot of academics discussing this, thinking about this, trying to forecast and predict what the future is going to look like and how it's going to shape and influence the way in which Australians live, how cities are going to be built, how infrastructure is going to be developed, and where money is going to be spent. We're going to have a chat about this today. In the studio with me, Tony Matthews. He's Senior Lecturer, Urban and Environmental Planning, Griffith University. Sounds pretty impressive. He's probably going to blow me away with his academic insights, and he's going to leave me behind, no doubt, but I'll try my best to keep up. How are you, Tony? You well, mate?
Great, Phil. Thank you very much. How are you doing?
Yeah, really well. Now, I'm conscious that you do this for a living and you teach the next generation of people who are going to be advancing this great nation forward. So I've tried to give a bit of a preface to our conversation, and that is stuff changing. Stuff is changing rapidly. The government's trying to be proactive in terms of how it responds to change, and proactivity is better than sitting around wondering what we're going to do and then 2 years later down the track go, what just happened? So things are moving in the right direction. Some will argue maybe too fast, too rapidly, and it's going to maybe shape or change property dynamics moving forward for years to come in a negative light. Probably outside the scope of this today, but I really want to get an insight from you about your journey, your interpretation of COVID-19 and how it's going to change and shape sort of urban and environmental planning into the future. Big question. It's a PhD topic, no doubt. Someone's going to do it. Did you actually run sort of PhD students? Is that still part of what academics do? Is that a big part of your job?
It is. And right now, actually, is a very busy time of the year for a lot of them. So many of my current meetings are with PhD students looking at a variety of different things. I have one that just went under examination. He's been looking at new cities in Africa. So if you're interested in investing in property in African cities, they're growing faster and quicker than anywhere else in the world. Huge urban expansion there, mostly driven by foreign capital. So that's one. I've got another guy looking at the effect of roads on birds. Birds struggle to cross roads. Even though they can fly, they get very thrown off by the change in the landscape. So he's looking at that. And I have another PhD student who's working with a commercial property development company to discover what the best types of greenery are to plant within buildings. If you're doing an integrated green design using natural planting for biophilic benefit, what are the right things to work in the subtropics? So I have another one looking at that. So I've got quite a good group.
Wow. Interesting. What was yours, Tony?
Mine actually was on the Southeast Queensland regional planning system. It was a bit more sober and dry, and how that system came into being, and then how in turn it started to create statutory policy platforms for dealing with climate change through adaptation, which is the big approach here.
Okay. And your thesis of that, was it well regarded? What did you sort of uncover, which was, it's a burgeoning part of the Australian ecosystem, Southeast Queensland. There's a lot of property investors up there buying stuff. Did you think they were doing a pretty good job at it?
Yeah, well, it's funny that you should ask that, Phil, because the reason that there's any kind of formal regional planning in Southeast Queensland is because of this long-term climate for growth, that particularly interstate migration into Southeast Queensland from the southern states has been driving a significant growth trajectory in Southeast Queensland since the 60s, really. But it was at the very end of the 80s, the start of the 1990s, when, let's say, larger strategic decisions were made about how to accommodate this growth into the future without sacrificing all of the amenity and the natural environment that made Southeast Queensland so desirable. And so that is in large part why the state and local governments came together in 1990 and formed a regional planning system. It was originally called the Framework for Growth Management, and it was about distributing growth across the region and not bottling it in certain areas, not concentrating it in certain areas. And that system is internationally regarded for its effectiveness. Now, we might have listeners that feel otherwise, but weighed up against other similar systems internationally, it's one of the best performers, and it's really the only proper integrated statutory regional planning system in Australia. There are similar systems elsewhere, but they're not as cohesive.
I've sort of spent a bit of time around academics and academia. Not that I am an academic, but I sort of get the process of very smart people passionate about a particular thing, trying to develop some new way of thinking or interpretation of something happening. And typically that's where it stops. And most people just think, academics are just eggheads that sit around in faculties discussing stuff, right? Can you give me some sense, Tony, for how a body of work like you did in your PhD actually translates into changes in regulation, changes in government, changes in direction, and how the outcome of that sort of actually impacts Australians?
That's a really good question. And it is somewhere where an awful lot of academics do fall down, as a lot of them make quite useful discoveries in their fields. And those may have nothing to do with property or property investment or economics or anything like that. But let's just say across the spectrum of academics, there are many people making very useful discoveries. There are ways of getting those out into the world and, let's say, affecting change through that. Now, that is a big priority of the current federal government, has been for a few years, is this idea of knowledge translation. I don't know if you remember, even a few years ago, Scott Morrison talked about this thing called the pub test. Could you explain your research and its findings to somebody in the pub? Yeah, I can do that. And I've always been able to do that. And I do a lot of things like this podcast, and I do a lot of media work where I get to share those findings and do some thinking in public and put these ideas out there. It's always been something that I've sort of looked at as being quite a natural extension to what we do. But a lot of academics don't do that or haven't figured out how to do that. And they should do that, because if you do make an interesting discovery, if you do produce some insight on the world that has real world implications, then those implications are unrealized. That potential is unrealized if you don't transmit that knowledge to the wider world, where people will be interested in picking it up. So in talking about things like urban planning or environmental planning or changes in cities because of COVID or things like that, I'll often take a lot of my thinking directly to externally facing outlets like this one, or say the Conversation website. I write for a lot of newspapers as well. And that's really the model of the modern academic. It's much more entrepreneurial, it's much more industry focused, and it's much more connected to what end users need, whether that's the finance system or whether it's people who are involved in the creation and production of products and materials or whatever. This idea that our research changes the world and to some degree is shaped by the needs of industry is much more fundamental now than it used to be. And that comes in large part from government, but it's also a significant cultural change in the universities. And so I expect into the future that more people will do what I do, which is find ways of sharing insights and ideas with a wider public in the hope of engaging conversations, which I then do. And I speak to people such as yourself, but I also speak to politicians and property developers and policymakers and people in the profession and so on, because I'm in a situation where I can look at these problems maybe a little differently and I have better circumstances to investigate some of these fine-grained questions. So that's how I do it. It's how I think we should do it. And it's increasingly how it's being done.
It's a very practical way to approach it. And I think what that does is put the work of academics like yourself into the hands of most Australians. And when you talk about urban planning, plannings of cities, town planning, this is something which touches all Australians. We all need to live here and we need to live in a particular way, and that is changing over time. When you look at the PhDs who you're steering through, this journey over this next period of time, you mentioned African cities and impact of roads on birds and this sort of stuff. Has anyone yet stepped up and said, we really want to try and bookend this COVID situation in terms of how the immediate impact or our consideration of the impact of COVID on urban planning and environmental planning is going to look like into the future? Is it too early now for someone to take on a body of work like that?
I've taken this on for a few months myself, in part because of an interest and in part because people came to me asking questions a while ago. In fact, a lot of the early questions that I got asked came from journalists in Asia, where thinking about the constitution of cities into the future is perhaps a more active conversation than it is here. But what academics do is they tend to look at things over time. So what people are doing right now in terms of like the pure research is they're looking for money right now in order to study the COVID phenomenon over time, over say 3 or 5 years, to look what the real trends are. And then you've got people like me who are buzzing around that are looking at the data that's coming out day to day or week to week, month to month from CoreLogic or from the ABS or from the banks or wherever, and sort of saying, well, look, let's not confidently predict absolute trends, but this is what the current data seems to be pointing towards. And so if you want to talk about the COVID thing, the current data seems to be pointing towards a certain class of individual going regional because they can take their big city job with them. The longer term question is that a new model of living for the average Australian? And if you were to give an academic answer to that and one that was grounded in truth, you'd need time to really investigate the question. For now, it looks like certain people are doing it, but that wouldn't characterize the entire landscape, let's say.
Yeah, and I really want to sort of drill down to that. We just got to break beforehand, back in a moment.
Are you struggling to invest in property this year and need help buying? Then you need to book in a consultation with Investors Dream and let us do the hard work for you. Don't fall victim to missing out on incredible deals like everyone else. Lock in a meeting today. Go to investorsdream.com.au and secure your financial freedom today.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Tony Matthews, Senior Lecturer, Urban and Environmental Planning, Griffith University, which is up in Queensland. Now, we talk about sort of top trends and is it too early to consider what those trends are? And with an academic bent, it's going to need time, sample size, the rigor around how you go about developing what that will be. So no doubt in 3 years' time, 4 years' time, we'll probably pick this chat up and see how different it is to where we are right now. But I guess the purpose of a discussion like this is to diarise the immediacy of where we are and what we're thinking right now. Now, most people I chat with, and no doubt the same, whether it's at a barbecue at the kids' school or people I know within property, everyone has an opinion on how they think life is going to be different as a result of COVID. And the sentiment is that everyone's going to start working from home a lot more, and therefore those people with big city jobs don't necessarily need to be tied to or tethered to a Sydney CBD office. They can work anywhere they want, and therefore regional properties is going through the roof. You can't even get an Airbnb or buy a place in X location anywhere in Australia now. That is right now. That's a narrative right now, but this is just sentiment driven, and there's not a lot of fact yet around it. What are you seeing? How big, how much of a seismic shift is COVID going to be to how Australians are going to be living?
Again, I think you're absolutely right, Phil. Everybody has an opinion on this, and it's hard to give an absolute diagnosis. And the other thing that we need to remember is that what we've been looking at up to now is, well, not even a full year of trend. But within that, what can we see? Well, regional property prices, at least residential property prices in regional areas, seem to be accelerating a little faster than they are in the capital cities. There seems to be a net loss of population from both Sydney and Melbourne, and mostly that is attributed to people taking their capital city jobs and moving to a regional area because they can still do the same job. They don't have to be living in the CBD anymore. But what's also very important to note here is that international overseas migration is completely switched off. And so prior to 2020, there was about 200,000 people a year. It was close to 200,000 people a year coming into Australia from overseas. All of those people needed somewhere to live. All of those people were looking for somewhere to rent or buy, set up a life for themselves. And most of them went to Sydney and Melbourne. So you could very easily say, well, yes, Sydney and Melbourne both lost people to regional areas and have had an overall population loss. But then you have to offset that against the fact that there's no population gain through overseas migration. And that will switch back on. Like eventually that will switch back on. That's too fundamental in terms of economic fundamentals of Australia. Overseas migration is too important not to bring back. Now, it might be brought back in a more moderated sense. And for years, there has been a conversation about what is the appropriate amount of migration into Australia from overseas. And there was a great deal of disquiet being, certain people were very unhappy about the level of migration, that 170 or 180,000 a year was too many. If you look at the post-war era, it was only 70,000 a year. And maybe we should go back to something more sustainable than that, because back then we had enough houses for everybody, or so the story goes. But that will come back. And so that is going to bring back a large demand to live in capital cities, because that is usually where overseas migrants go first. They'll go to capital cities. So eventually there will be an upswing in demand for capital city accommodation. The other thing to remember is that a lot of the people that are upping stumps and leaving the capitals and moving to regional areas are people who are either very qualified professionals and therefore high earning, and or they're that plus they have money to begin with. They've built up wealth over the years, that they got an investment portfolio or whatever. Or maybe they bought their property in Sydney or wherever 15 years ago when it was much cheaper than it is now. So what they can do is they're in a situation where they're in high demand as a worker, and they can negotiate an arrangement for themselves with their employer because they're not easy to replace and they have a long track record. And also they have more capital to make the move. For most workers, this is not actually available. For most workers, moving to a region and keeping your capital city job is not going to be viable, because you're either you're one of these essential workers who actually has to be at your workplace or is moving around or something like that. You're not just in an office, or you're not senior enough for your employer to want you to do it. And, you look at, say, somewhere like Melbourne, where the state government wants 75% occupancy back in the office, so they want 3 or 4 desks full again. And so that would suggest that, as a large employer in Victoria, for example, they're not looking at remote work as being a significant part of the workforce arrangement long-term, maybe a larger part than it was previously, but not the majority. And so that's going to be something that plays out over a few years too. There's going to be a lot of negotiation between individual workers and their employers about whether or not they can make this move. But there's also going to be employers making that decision for their workers, like the Victorian state government did, which is basically, if you work for us, we expect you to be in the office, or in the office 3 days a week, or whatever the case may be. So some people are going regional, some people will continue to go regional. It's going to put pressure on certain regional areas along the Central Coast, for example. The Sunshine and Gold Coast here are both booming. The surf coast around sort of Tweed Heads, the lower Gold Coast, all around there is going crazy as well. Same thing in the blast zone around Sydney and Melbourne. Those are the regional areas that are doing really well right now. You couldn't necessarily say the same for further regional towns that, once you start heading 2-3 hours west, for example, I'm not sure we're seeing exactly the same scenario there. And as I say, eventually when the migration tap is turned back on, there will be a large demand again for city centre residential property.
Yeah, that was really well explained. And to give some context for property investors and how I see the world, and I think where the dangers may lie, you really need to temper your decision-making based on the immediacy of the discussion around the shift in behaviours and jobs into regional or sea change towns. And that might be the way it is right now. But there are so many different moving parts to actually make an informed decision based on fact and data at this point in time is potentially quite dangerous, because to your point, I know this, you've seen the same here in Sydney, the state government wants to get people back into the CBDs, and the CBDs is the lifeblood of our capitals. It's where the commerce happens, is where they've spent billions of dollars to invest in infrastructure to support the transition of people inside and outside of CBDs. Everyone's highly invested to get people back into CBD. So point number one. Point number two, and I get it, not everyone's going to have the financial capacity and or the seniority to actually go and live part-time on a beach to get the job done. So you need to be really careful right now as an investor not to make decisions without a full suite and set of facts, and those facts just don't exist. Now, this lends itself, Tony, to the discipline of what you do, urban and environmental planning, and maybe I should have maybe given you opportunity to explain that a little bit more at the top end. Well, what is the breadth and spread of that? Do you and your sort of cadre of academics and associated professionals sort of work out what our cities should look like?
I wouldn't say we directly work out what they should look like. What we try and work out is what an optimal arrangement might be, taking in form and function. And so we don't tend to generally hand down prescriptions in terms of this is exactly what a city should look like, and if it does, it'll work perfectly. The planning profession did that in the past and really only stopped doing it in the last 50 years. And well, let's just say that an awful lot of modernist housing developments, particularly for social housing, were an outcome of that, of planners thinking that they had figured out the question. So we don't do that anymore. We're not in the business
and everyone knows the buildings you're talking about. You drive from Melbourne Airport into the city, they're on the left-hand side, you see them.
Yeah, and that was back at a time where the philosophy in the planning profession was, if you apply the functions and principles of machinery to city planning, then you'll get the same degree of efficiency and result, which of course was nonsense, because you have to consider the human subjectivity factor. And that was what was being ignored. And that's the big thing. And so that's something that we look at now. So what we kind of tend to do is take a slightly more strategic look at what's going on, if you like. So let's say the average planner that's working for a state or a local government, they're worried about the current development plan. They're worried about some housing estate that's gone in for development assessment. They're concerned that the bus routes aren't going to handle population in 5 years. They're dealing with people calling for more social infrastructure, people wanting more parks and cycleways and all that kind of thing. That's what most planners are doing most of the time. They're trying to deal with day-to-day stuff. And they're trying to find the best results with the means that are available to them, taking in the fact that most property decisions are ultimately a market decision anyway. Somebody still has to put up the money, and the money still has to be exchanged and go via different parties. What we're able to do as academic planners and as people that are involved in research is we're able to look at things from a slightly more strategic level and sort of say, okay, well, here's an urban problem in Australia. Where has a problem like that been observed previously internationally? Is that a comparable context, or can we adjust that context to be comparable? What do we find out from looking at that example, or those multiple examples if we can find them? How would some of those insights or solutions translate into the Australian context, given the way that we develop and manage and create policy for our cities? And would it be culturally accepted? So what we can sort of do from that is derive, let's say, principles or strategic ideas going into the future that we can then put out there for consideration. And that's increasingly a function of planning practice as well. I mean, things like regional plans or city plans, they have a longer term timeline than they used to. Like the Southeast Queensland regional plan, for example, now looks 50 years into the future. Now it'll be revised every couple of years. And so it's not making a call in now about 50 years time, but it's looking that far down the track saying, well, we're still going to be dealing with people wanting jobs and housing and transport and all that in 50 years. So how do we sort of start meaningfully planning for that now? So one of the things that, so as planning practice is becoming more strategic, but still is largely concerned with the day-to-day, we try and give a more strategic lens and a more sort of long-term lens to some of the bigger questions that the average planner doesn't get to deal with. And that's really where we fit in. And of course, we do work with industry and answer more immediate questions as well. But we're lucky to have the latitude to ask some of the bigger questions and have the scope to look at what the answers are.
And for our listeners and property investors by and large, residential and also commercial, to give some sense for, they're never going to be experts at this sort of stuff. And if you need support as a developer or otherwise in this regard, you can buy the expert opinion. They're readily available, some good, some bad, but you can actually buy that. But I think it's important that everyone's got a basic understanding of the way in which infrastructure planning decisions are made in lockstep with the needs of the future today and into the future. And I think a 50-year time horizon for Australia is more than appropriate, particularly large geographic areas where you are. To give some sense of that then, if, I was, first year undergraduate, got dragged away from the bar, Urban and Environmental Planning 101, my first lecture. Tell me about what would be the key themes that you would be instilling into these sort of this next generation of people coming through to say, you've chosen this as a university course. This is what you need to be doing. And here is a positive outcome of you doing your job well.
Well, I mean, the positive outcome is very simple. You improve people's lives and livelihoods, because the business of urban planning is a bit like the business of property development. It's in what you're doing is essentially conditioning where people spend most of their time, where they live, where they work, where they recreate, where they send their children to school, all that sort of stuff. So, if you do good planning, similar to if you develop a good community or something like that, or a good housing estate, people will benefit from those outcomes. If it's done properly, all of that advantage passes on to a community. So that's something that you can do. You can actually fundamentally make a change potentially as a planner. You can improve people's lives. You can also, if it's your thing, and we get a lot of this with our students because of the environmental component, you can, safeguard environmental areas. You can help to ensure that development doesn't unnecessarily, for example, clear land, or doesn't cause property. You can try and avoid things like coastal erosion, and so you've got these options as well in terms. But it all comes back to how you organize land and how you organize development. So we would tell our students, look, you've got very good potential to make a difference in the world in terms of people's actual lives and how they live and how long they're stuck in traffic, or how much access to nature they have, or whatever your interest is. But fundamentally, in order to be able to do that, you need to understand three things. You need to understand space and how it works, and how you think space works may not be how the world thinks space works. We all look at a space and we try and figure it out in some way. And it's tempting to think that the way we see it is the way that everybody sees it, but that's often not the case. So you got to learn how the context of space and understanding the context of space, which is largely shaped by the people that use it. That's where the modernists went wrong, right? They forgot about that. The other thing that you really need to understand as a planner is that there's a development cycle, and there's market function out there, and there's private capital out there, and there's imperatives around that where people need to make a return, or they're paying interest, or return, they have loans to pay back. They need to develop something and move on if they're to do the next project. And so you're not there to impede that. You're not there to impede that. And that's one of the criticisms that the planning profession gets a lot in Australia, is that it's, too much red tape. It's impeding development. But if you don't have any planning system, then there's no controls on development whatsoever. And if you want to see what that looks like, you can look at the city of Houston in the US, and it's basically a disaster area. And when they got that big hurricane a couple of years ago, it ruined the place because nobody had done strategic planning there. So you don't want that either. So that's another thing that as a planner, you've got to understand. And the third thing that I would say to students that you have to understand is that it's all inherently political. Land use, how land use is apportioned, how land is organized, where priority is put for developments and things like that. There's a huge political component of it. And I'm not just talking about, the local councillors or whatever, but property development, politics and planning are deeply political activities. There's a lot on the line. It's fundamental stuff. There's heightened emotions, heightened investment. There's a lot of grounds for contention. And so it is a particularly political landscape, and you would be naive not to realize that and understand that you're existing in that as a professional.
And if you look at those three pillars that you just outlined then, and to give some context for it, the business of or discipline of, or the profession of planning, how much, putting technology aside, how much has it actually changed over thousands of years? You think back to ancient Rome, or Palace of Knossos in Crete, or a lot of people are familiar with Vesuvius, undigging the past and seeing the sophistication of the cities of the years past. It's fundamentally the same, isn't it?
Yes, I mean, it is. Look, you can go back 6,000 years to Mesopotamia and you'll find the sort of first patterns of a city where you've intersecting streets and you have housing and land allocation for certain activities and market squares and public spaces and things like that. That goes way back. And that's a fundamental of city planning that's been with us for thousands of years. And the Romans did it, the Greeks did it, and everybody in between did it. I mean, it changed in the Middle Ages. There were a lot more things like walled cities and things like that, but still you had streets and houses and land organization. Most Australian cities started out following a grid pattern, a military grid pattern, because they were originally settled as military settlements. And so there was a sort of a standard. And it was probably really until the start of the 20th century that planning in a lot of the world was more a function of architecture and surveying rather than planning as a discrete profession in itself. Like the first town planning institute in Australia only came into being in 1913, and that was in New South Wales. And most of the other states followed then in the next few years and decades. And then we had the Commonwealth Housing Commission it was the early 1940s, I think. And that was to kind of build a nation during and after the Second World War. And one of their conditions for lending money to states was that the states had a planning system. And so that sort of embedded planning as a part of the Australian development cycle. But this idea that it's something beyond just organizing land use and setting out streets. That really came in the 20th century, where there was a much more fundamental kind of, let's say, acceptance of the fact that people and their priorities and perceptions really matter, for better or for worse. And so planning switched to a model that focused much more on engagement, and often preemptive engagement. So all of this stuff that you see now with community consultation and community forums and send us your thoughts, and here's a website that you can go to and you can color in how you think things should be or whatever. All of that has come from a realization that bad planning happens when you don't consult stakeholders, and stakeholders are often people that are not directly in the development cycle. They're the receiving communities and things like that. And I mean, if you want to see one of the areas where that's sort of gone badly wrong, and well, I won't say it's gone universally badly wrong, but if you look at the urban densification agenda or the urban consolidation agenda, which has been in most of the capital cities since the 90s, that's a primary planning policy. Use land more efficiently, increase densities on land, build more, and don't sprawl as much. Which sounds great on paper, but then the receiving communities, particularly in suburban settings where individual houses were being turned into townhouse developments, you got huge pushback on that. And, one of the reasons for that was maybe there was an assumption that, let's say, the sustainability argument for this would be widely shared by the receiving communities, when in fact it wasn't a lot of the time. And so this understanding of needing to take people's perceptions and things into consideration really became a big thing in the 20th century, and is still there now. And it's actually taken really seriously in a lot of ways. Like, it's not exactly planned in the way that a city is, but if you look at how a shopping center is put together, it's incredibly cleverly planned and designed in order to meet the needs of the user. And increasingly, urban planners are trying to do that with cities, trying to meet the needs of the users. Who's using the space? What do they want out of the space? What do they like with the space that's there? What do they feel is missing? And how do we sort of deliver that in conjunction with also the need to manage the delivery of development and buildings and apartments and everything else? So I won't say it's shifted its focus much more towards the experiences of people as well as just the kind of the development cycle.
Yeah, and I'm happy you made that point, because what that does, it shapes the way in which values of properties are seen or felt, and whether or not lenders are happy to lend you money against them, and easy to be decision makers as property investors around it. I want to sort of chat about commercial property, because that has a part of this equation as well. We'll just go to a break beforehand, back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member, and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop, and for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show, with Tony Matthews, Senior Lecturer, Urban and Environmental Planning, Griffith University. We're chatting through, I guess, the discipline of planning and how that happens and how that transitions into the way in which you as a property investor can potentially make better informed decisions. Now, chatting about COVID, shift out to the regions, etc. I take your point around there's very little, if any, positive international migration in Australia, which has been a big driver of capital city property prices over many years, in nearly a couple of 100,000 a year. And you see that, you go out in the suburbs and you see that taking place. Now, commercial is part of it as well. And commercial is where people work, and where people work is where they derive an income. Income is directly connected with people's perception towards wealth and being an enabler to build a better life in Australia, which typically means buying a house or at least having shelter. So all these things are highly interconnected. What are you seeing in the commercial side, Tony, in relation to shifting changes in behaviours that might have been happening before COVID-19 anyway?
It seems that, you can look at it on a city by city basis, and each one has its own profile, as you know yourself, for commercial, the same as it does for residential. But it's very easy to sort of point to the data for somewhere like Sydney or Melbourne in 2020 and say, oh, look, there was a big drop in demand for commercial property, and that must be because of COVID, and companies are afraid to open up, or they're downsizing their office space or whatever. That might have had part of it, but if you look at 2019, there might have, and certainly in Melbourne, there was a bit of a sag as well. And you might say, well, that's just because there's been so much new supply into the market that there's a slight oversupply now. And therefore, you'd expect a slight softening of demand because of that. The big question about commercial property basically is about the kind of commercial property that gets used for professional offices. Because commercial property that's used for anything that absolutely requires you to be on site, like commercial property for a car dealership or whatever, like they're going to continue to be in-person operations. but it's commercial property, particularly CBD buildings that are rented out to businesses for office space. That's where the uncertainty is at the moment. Like, what's going to happen in the next 5 years with space demand in the commercial sector? Are companies going to insist on their employees going back to work? Are they going to cut some sort of a part-time arrangement with them? Are they going to completely decentralize? Like, I have a friend who's based in Madrid. He runs a software development company. They've got offices in 7 European countries. They've about 250 employees. Everybody's gone home permanently. So he's giving back all of his leases. And they can do that. They have the infrastructure for that. So that's one extreme example. You have other examples where employers are saying, unless you have a very, very compelling health reason not to be in the office, we expect you back now. And, that's the other side. So where are businesses going to fall on this? And the thing is, if they can decentralize their workforce substantially, they do stand to save some money on rent. So they might reduce their office demand. So this is a problem in the commercial property sector for anybody that owns that kind of property, is like, what's the medium-term demand going to be? Is there going to be, if we lose the commercial tenants we have now, the professional tenants we have now, will more come in, or will we lose them permanently? Will we be unable to achieve full occupancy of the building? And what does that mean for our fundamentals? Can we pay back the loan on the thing? Or, so there's some serious questions getting asked at the moment. Some of the other questions that are getting asked around that then are like, if these buildings are not viable long-term for commercial purposes, what reuse have they got potentially? Is there a potential for reuse? So that's another question. And then there's a flow-on question as well for cities themselves, because the money that runs a city comes through rates and people spending money in the city and footfall and population. And so if that declines overall, then the city potentially has less money to run itself. I mean, we've seen this with dozens of American cities, for example, that the Rust Belt cities particularly, where the major employers left and there was nothing left behind them because there was nobody to pay taxes anymore. And I'm not suggesting that's going to happen to Australian cities, but if there is a long-term, even gentle downward trend in demand for commercial office space in CBD areas, that's not just bad for individual investors, that's also a significant concern for city authorities in terms of their budgetary bottom line. And it's also a concern for infrastructure providers, because most infrastructure business cases are constructed around the idea of an ongoing increase in demand. And so the numbers that support train lines and bus lines or whatever usually, predict a long-term gain. And what's happening at the moment with COVID is the data is unreliable. And the baselines that we used to use are not reliable anymore. And we have been unable to establish new baselines because we still don't know what the future is exactly going to look like in terms of commercial space demand, but also things like migration. So for certain types of commercial property investors at the moment, this is probably a very uncomfortable time and a very uncertain time. And I don't necessarily see clarity coming quickly.
Yeah, there's a discipline that sort of come out of the military, which is now sort of wed to management and management consulting. I don't know if you heard of a VUCA environment, VUCA, volatile, uncertain, complicated and ambiguous. And what you've just done there is explain that in terms of how our cities are going to evolve into the future. No one knows that the data at the moment isn't reliable. So how does the government progress in terms of making decisions in investing into the cities? And your point around, and a lot of people forget that one of the reasons why, and I mentioned at the sort of top end of this podcast, that the government wants people back in the offices because they help stimulate the economy. Now, they want more businesses in the CBDs because those businesses, obviously, if they can make money, they're paying taxes. Taxes is good. They want to see properties transact because that's where state-based governments obviously make a lot of their money. Local governments made a lot out of rates. So they need the wheels of commerce to be moving forward. But we're at this environment now where no one really knows what's going to happen. Your job, your role in many ways, Tony, is to try and work that sort of, that blue sky thinking about what the future holds and therefore how decisions can be shaped. I guess to conclude this particular chat, any sort of bold projections for what we're going to be looking like in 5 to 10 years in terms of how different it's going to be to how it's actually been over the last sort of 5 to 10 years?
That's a good one to think about. And it's one I've thought about a lot, and I've sort of gone back and forth in it over time. I published an article in the middle of last year where I sort of I really wanted to have a think about the philosophy of all of this. Would people's basic perception of space be fundamentally changed by COVID? Would they be very slow to go back to the office or wary to go back to the cities or whatever? And living in Brisbane, which has been hardly touched at all by COVID, that doesn't seem to be the case. People are very, very happy to go back to the way things were. They kind of enjoyed the lockdown for a while, but most people seem to be happy to go back to the way things were. They would prefer to be in the office for the most part. They don't want to be at home all day. Maybe they might want to be at home one day a week. So I suspect, CBDs will go back to being fairly vibrant over time. And I think CBD-based professional activities will continue to occur because you also got a lot of the infrastructure for professional activities, like, the law court and things like that are all in cities. All of that so the entire legal industry is built around that. And so as long as that's there, they have to be there in some capacity, just as one example. Hotels catering to tourists and so on, casinos, they're not moving. They're all going to still be around. What you'll probably see is some people will permanently relocate, take their jobs with them and go to regions, but they will not be any kind of majority. Eventually, more people will move in because migration will switch back on. You'll have new graduates coming through, all of that sort of stuff. People might continue to work from home 1 or 2 days a week, but they'll still come into the office. So I suspect most commercial property might sag a little bit, or let's say commercial property for professional use might sag a little bit for a few years. It's probably going to be worse in retail. I'm not sure what the recovery is going to be like for retail. So a lot of commercial or a lot of retail space in cities could well be vacant into the future and problematically vacant. I don't think the office blocks are going to be quite as vacant, and new enterprises will take over anyway. So I think, long term, that'll probably stabilize, assuming that like lockdowns don't become a rolling thing. And I really hope that they don't. Then eventually we'll figure out, public transport ridership and things like that as well. One thing that you might find in cities is more of a demand for car parking. I suspect there's going to be more people resorting to private transport into the future. So that could be a bit of a problem. That's already a huge problem. It could become a bigger problem. But you get a lot of these blue sky ideas about if we take 3 office buildings, we can consolidate the remaining businesses into 2 of them, and we can knock the third one and build a park there. And it's that sounds great in theory, but how exactly is the finance of that going to work? How are the economics of that going to work? Who's going to pay for it? It's not that simple. We're not painting a picture here. This is real life, and it's complicated. So a lot of that blue sky thinking is not really going anywhere useful. I suspect we'll go back to pretty much what we had, maybe with a more flexible workforce, and more working from home. But by and large, I think, assuming lockdowns don't become a rolling thing, we'll probably in 3 to 5 years be more or less where we were a year ago.
And you made that point around, as an urban planner or a developer or whatever it is, there's a commercial application or everything. It might be nice to knock down a building and build a park, but someone's got to pony up the cash to make that happen. So there is a commercial. And just so, I guess, to conclude, Tony, the IMF, there's global benchmarks, and you'll be familiar with these, which pretty much says property in Australia is so overvalued compared to other parts of the world as a percentage of or indexed against what the average Australian earns. I think it's like 8 or 9 times, right? Where the global norm outside of your areas of London and maybe Hong Kong is sort of, 3 or 4, whatever. So property's overpriced. However, what you've painted here is unique dynamics around Australia, which maybe sustain or support that. When you look at property as an asset class, and this is for property investors and maybe a little bit outside of your skill set, but property as a fundamental asset class for shaping the economic health of the nation, is it going to be good into the future? Any major concerns?
Don't buy an apartment would be my advice. If you're buying residential, buy a house. Be wary of body corporates because they cause you trouble. But I think in terms of an asset class, residential property is pretty safe into the future. I have no concerns about that. And globally, we're going to see a lot more money into property as an asset class anyway, because there's so much money being printed globally that especially the US dollar, that cannot go on forever. And investors realize that, and they want to put their money somewhere more secure, and they're not making any interest anyway. So residential, I think, will probably do fine. I think certain types of commercial will be fine as well, particularly newer buildings and ones that are less vulnerable to cyclical things like lockdowns, where it's a purely desk-based workforce. Retail, look, it's a pretty complicated landscape in retail, but the kind of city street or suburban street retail properties, the big problem with them is going to be finding tenants. And that's already becoming a problem. So I would be a little bit more wary about that. But I think property is going to continue to be a significant class of investment for most Australian investors, either residential or commercial or both. Personally, I don't see the basis for a significant crash. I don't want to be wrong about that, but but I really don't. And when I came here first, 11 years ago, I was coming off the back of the Irish property crash, which was astronomical.
Yeah.
But some of the fundamental levers that you would use to manage something like that were not available because Ireland was in the Eurozone. So we had no control over our monetary policy, couldn't change interest rates, couldn't do anything like that. And part of the problem was all of this money that, the money that was on deposit in Europe became a shared resource. So certain places overborrowed heavily. Again, you've the banks here are relatively fundamental, and they've tightened up on lending as well. So I think property looks relatively stable into the future. There could actually be some significant gains in certain types of property. I'd be concerned about anything that has to do with retail and tourism for the time being, though.
Okay. Well, thank you so much for your insights, Tony. I really enjoyed the chat.
Me too.
Getting a bit beyond probably my pay grade to talk about this sort of stuff, but I guess my job's just to ask the questions, right? So highly informative. And I think what you've done is, for me particularly, you've dumbed it down to something that I can understand. So no doubt that will resonate with our listeners and our audience. So thanks so much for your time today.
My pleasure. I'm very happy to offer financial perspective, not financial advice. I'll just say that at the end.
Absolutely. And I'll echo that sentiment with this is a general chat between a couple of guys. There's no advice given, but hopefully you can make more informed decisions as a result of some of the information that we spoke about today. Tony Matthews, Senior Lecturer, Urban and Environmental Planning, Griffith University. Thanks for your time today.
Very happy to be on. Thank you, Phil.
Nice one. Remember to check out smartpropertyinvestment.com.au. This is the sort of breadth of conversations we like to have, from property investors to academics to data scientists to the whole kit caboodle, this ecosystem which is property, and you'll get some sense for just how wide that is in discussion today, the sort of macro, micro economic levers that we have within the bureaucratic engine that is the government, and what that means for all those people out there trying to, I guess, turn a dollar in property. So we'll keep at it. Remember, social media, Smart Property HQ is where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.